Altcoins may have been completely obliterated over the last 60 days, but February could hold promise for at least one specific coin. In fact, this one specific coin has such intense potential that I am actually shaking here as I'm about to bring it to you. That's right, USDC has potential here to pump from 0.9999 up to $1, and I'd be willing to risk my entire professional reputation on that happening. All right, over the last 60 days, I've gotten one of the biggest beatings from the market that I have ever gotten in my life. And one of the things that made it so hard was the tale of two cities, the intense amount of good news from the Trump pump, from the executive orders about establishing a national digital stockpile, about clearing out the SEC, legalizing altcoins, making made in America crypto a real thing. There is so much to be excited about, and yet the price went down unrelentingly. So as soon as I finish this episode of the Talk to a podcast, I'm gonna dive in and show you guys exactly which coins I think have the best upside in February of 2025. But first, let's talk about it, because altcoins right now are the ugly ducklings of the financial world, with people joking that alt season means that alts will go to zero and then they'll pump, but only up to lower than your entry. Others pontificate that there is absolutely no way that altcoins can go up in a world where there are 34 million coins. I've actually been talking about the effects of things like pump fund for a while now. Now, the reality is I don't think that pump fund will ruin crypto. I mean, if you look at the altcoin market, it's just disappeared all at once. But before that, select alts were doing just fine. The types of people buying high quality altcoins in the AI sector, in the L1 sector, in the gaming sector. Those are not people who are then splitting their capital with Trench's meme coins that are named after whatever Elon Musk ate for lunch that day. Now, all that said, sentiment in altcoins is the lowest I have ever seen it. And typically, I've only seen this level of sentiment at bear market bottoms. The FTX collapse, the collapse of Luna in early 2022, the collapse of the bull run in mid 2021. This is the type of altcoin capitulation that we've seen. And Andrew Kang, who has made some really bold calls, most of which I kind of use as a counter signal because he tends to go all in on things typically towards the end of their trend. This is where he's now calling for, that's it. We're not going to have a real alt season. We haven't had one since 2021. We've instead transitioned to an era where we sporadically have echo bubbles post BTC rallies. The 4-year cycle has been dead. Understand the new paradigm. Well, would it surprise you if the information I'm going to show you today confirms that the 4-year cycle is not only not dead, but it hasn't even started yet? Let's actually focus on this because it's really important to why I'm not just full-scale capitulating my altcoins based on what we've seen over the last 60 days. Obviously, people are just memeing alt season because things are down only, and taking a look at the alts across the board, it's almost unbelievable how hard they've fallen. People saying, what part of the cycle are we in? And they're joking that the whole cycle happens each day. This is definitely a banger post to me. My buddy Miles is saying you got to remove alt season from your vocabulary. In November, we had meme season. In December, we had AI season. In January, we had agent season. February, RWA. The thing here is what you're seeing is that the current pool of capital is just rotating around. If you remember at the beginning of 2024, we had a raging gaming season. Then it moved on and we moved into memes. Then it moved on and we moved into AI. It moved on and we moved into agents. It moved on and now it's in RWA. And I think RWA is a great place for it to sit. We'll talk about that at the end of the episode, but there's something deeper, a much more profound observation that all of this falls short of. With Bitcoin just hanging out in a range here, I mean, maybe this is some higher lows, certainly too early to say now. It's probably likely that it'll go and explore the lower end of this range, maybe bounce around here a little bit. But Bitcoin, my friends, is above $90,000. It's spent some time over $100,000, and it's not very much off its highs. So by all means, this doesn't feel like the end of the cycle. The question is what's going on with the liquidity for altcoins, and when should we expect, if ever, in altcoin season? Spoiler, I'm still holding the vast majority of my altcoin positions because I believe we are going to get one. And here's why. What you see here is effectively all of the altcoins. And what we've done is we've taken total 3, which is everything besides Bitcoin and ETH, and we've actually subtracted the stablecoin. So you have total 3 minus USDC and USDT, and then you divide that by Bitcoin. So we see all the altcoins charted against Bitcoin, and you've seen that they actually perma-topped here, or not perma-topped, but they topped, hopefully not permanently. 2 years ago, they're down about 70%. What's really interesting to see here is that they bottomed, this cycle bottomed last time. Last cycle bottomed exactly as QE stopped, because this orange line shows you, or this purple line up here is the Fed balance sheet. So this Fed balance sheet is overlaid, and you can see that it was going down up until this orange line, And that's when this relationship between altcoins and Bitcoin truly bottomed last cycle. So now we have it running back up. So what you can see here is that this was the bottom that it put in at the end of last cycle. And does that mean that we have to go down and tag that orange line? Maybe we have to go tag this. But the reality is that that's when things stopped. So the question is now, why have alts been going so crazy? And the answer is pretty simple. There's been a lot of liquidity in this ecosystem, regardless of the fact that we don't have overt quantitative easing. Altcoins have been running to the tune of 30x like Super, or you got 100x's out of things like Pepe, 1000x's out of things like Fartcoin if you bought them on Pump Fund. The reality is that you were able to buy crazy altcoin gainers, even though the market isn't in a widespread alt season. And I think if you look a little closer at the mainstream stock market, you realize this isn't a phenomenon that's just tied to altcoins and crypto. Think about alternative stocks. ChatGPT estimates that 70% of all stock market gains over the last 2 years have come from the Magnificent Seven, or the Mag 7 top 7 stocks. You could think of this kind of like Bitcoin dominance, which by the way made a magnificent wick up here to 65%. So not actually far off if you take 65% of the gains of the crypto market are Bitcoin, and actually about 70% of the mainstream stock market, 60 to 70%, depending on how you calculate, came from the Magnificent Seven. You're looking at the exact same situation. The Mag 7 and Bitcoin are both going up as safe havens for capital, because we all know that really clipping your T-bills, it's not even getting you ahead of the inflation rate that we're experiencing. So nobody really wants to be all in treasury bills, but we do know that we need to put our money somewhere, and people are putting their money in things that are safe, like Bitcoin and the Mag 7. And by all means, if we're on the eve of a Bitcoin strategic reserve, there's a whole lot of reasons to hold Bitcoin. And so Bitcoin should always be a healthy part of your portfolio. It keeps you from losing your mind throughout these downturns. So are there any signs that we might be reaching the end of quantitative tightening, that we could see the Fed's balance sheet stop reducing and potentially see some life breathed back into the assets like alternative stocks or, of course, altcoins? First and foremost, there's this chart right here that Scranton put up, and he essentially is showing that there has been a sort of false breakout of a range of Dixie. Dixie is the US dollar. And that typically happens. You get this sort of bull trap on Dixie right before you move into a period of easing. Now, the dollar is strong. It's almost too strong. In fact, one of the main objectives that Trump has right now with the Treasury Secretary is to weaken the dollar and to drive the rates of the 10-year Treasury bill down. In fact, there was just an official announcement that Scott Bessent, the Treasury Secretary, the new Treasury Secretary, his first and foremost goal is to drive down the rates of the 10-year yield. How he's going to do that? I think it has a lot to do with some of these renegotiations that Trump is doing with his trade war. I don't think it's all just about tariffs. And if he's able to drive our trading partners into buying enough 10-year and even longer dated bonds, then he could drive down the value of those bonds and the interest rates of those bonds, which would make it very easy to finance things like homes, like investments in businesses, like investments in companies. The writing is on the wall that if Trump gets what he wants, we're about to enter into a new period of cheap capital, which will drive asset prices like crypto, and especially the altcoins, through the roof. Again, will it happen tomorrow? Will it happen next month? Will it happen this year? We don't know the answers, but things have been moving extremely rapidly in the Trump administration, and I wouldn't be surprised to see this be very, very high up on the list. He knows he can't move markets with the dollar and rates where they are. But if you recall, Jay Powell wasn't that receptive to Trump's advances. In fact, you get the feeling that he really didn't like Trump calling him out like that, and he dug his heels in the first few meetings that the Fed had, essentially showing he's not just going to do what Trump wants. But we have someone who's not Trump. We have Bessent now, who, according to Jeff Park here, who's one of the lead investors at Bitwise, has said they had a constructive meeting. This is according to Scott Bessent. I actually DM'd Jeff and I asked, do you think Bessent has some juice with Powell that maybe Trump doesn't have? And he said, absolutely. Again, speculative right now, but if we can get Powell and Bessent to collaborate to bring down rates on the 10-year, and then that allows the Fed to cut rates on the short end, now all of a sudden we're really cooking. Because if long-term rates come down, then it totally makes sense to drop short-term rates to make those long-dated rates even more appetizing. And again, this chart just shows you the 60-day rate of change of alts. You can see that we are in an area that hasn't been explored since the May 21 collapse. Since before that, the Bitcoin all-time high breakout. I'd argue that we're much more similar to that Bitcoin all-time high breakout of 2020, where Bitcoin's broken out to an all-time high and alts have just collapsed. Alts have just disintegrated into dust. And what we're hearing right now is there's no reason to hold anything but altcoins. The actual pessimism and the bear euphoria happening around altcoins right now is all-time highs. I've never seen bears on parade or Bitcoin maxis on parade like I've seen them recently. And that to me smells almost like consensus. there is a dangerous consensus emerging here that altcoins can never make you money. And I find this funny because we just came out of a cycle where things called Fartcoin went up 1,000x, where people were cheering for tens of billions of dollars in market cap because the dog has a hat. And I have no problem with memes. I don't have any problem with trading them either. But it's just funny to me that now that everything's crashed out 80, 90%, people are screaming, coins need on-chain buybacks. Coins need layer 1 blockchains. Coins need passive flows. When nobody was saying that all of 6 weeks ago. It's really funny how things change. And it just shows you that recency bias is a motherfucker. So in order to keep us from getting too caught up with that, I want you to not miss the forest through the trees. I believe there will be an altcoin season. And if everything we saw over the last year and a half was only rotational money, was only a bunch of degens kicking the can around between each other without real fresh meat, without real fresh liquidity, then you better be scared. You better have your seatbelt buckled tightly for when new liquidity does arrive, for when the Fed does pivot, for when QE does begin, because it's coming and it's going to hit like a freight train. So while I don't know exactly how low this move could go, I do think that people who are too caught up in the bear euphoria will end up extremely, extremely mad that they missed out. Now, I just found this absolutely hilarious. This is a congressman, a sitting representative, a U.S. representative, Michael Collins, and he said essentially Unusual Whales did a report that he disclosed $15,000 buys in ETH and $30K in virtual, and that he sold virtual 9 days later after being down estimated 38%. And he commented below from his official government account in the trenches. And I had to check, but this is actually his account. This is a congressman who's joking around about being in the trenches. I'm sorry. This is the crypto super cycle. This is the mass adoption wave, at least on the speculative side. And I think things are going to get a whole lot crazier. Now, just to drive this point home, a lot of people are saying right now that Trump wasn't good for crypto. But if you remember, when he started to become the favorite here in crypto land, Bitcoin had made its way all the way down to about $50,000. And since then, it pumped 120%. That is 2.2x it grew, okay? So without Trump, and this was when his assassination attempt happened, was the bottom of this wick, and things exploded from there. And then when he won the election, just purely on the back of him winning, the entire market went up and crazy to the right. So we have one of the biggest bull signals here, which is Trump being elected, but that was before he had done anything. I would argue that everything we've seen here, from about the 50,000 territory all the way up to 110K, has been the Trump pump, has been estimating and being excited for everything he's going to do. Then we came to the reality, which is that some of the things he's going to do, like a Bitcoin strategic reserve, will take some time. Like the tax treatments he's talking about, those will take time. QE, clearly the Fed is not immediately bowing down to him. Those will take a couple of weeks, maybe a couple of months. But I do think that if you are going to throw away crypto when we are at the eve of one of the greatest eras of this industry's history, certainly the golden age of crypto, as I'm calling it, I think that you are being way too jumpy and way too foolish, because we didn't come this far just to come this far. So with that said, let's talk about the coins that I think are going to perform in February of this month. And it's going to be a little bit more cautious. It's going to be a little bit more, hey, let's be careful here because we don't know how low this move could go. I'm going to tell you my strategy right now, but I'm not here trying to turbo nuke all of my favorite positions. That's not what I'm doing. So first and foremost, obviously get yourself some Bitcoin if you don't have it already. We just have never seen this many good things line up for Bitcoin. We have potentially a strategic reserve. If there's ever a time for Bitcoin to have its moment in the sun, its last real reflexive crazy upside moment, it's this cycle where it could go from here anywhere from 2 to potentially up to 5x. It could go crazy from here, which for Bitcoin is, I mean, you could pretty much full port Bitcoin and still be crazy to make a 5x. So I wouldn't be surprised to see Bitcoin have its craziest cycle ever this cycle. So Bitcoin definitely in your portfolio, and it should be a significant chunk of your portfolio or stuff that tracks with Bitcoin. And that brings me to coin. You know, the thing about Coinbase is it's actually crazy how it does really well with Bitcoin's upside. It started the cycle at $30 and went up to 300, I think at 40. So 11x or so, which is way more than Bitcoin's gains. So it gives you sort of levered upside on Bitcoin, but it doesn't go down quite as much as altcoins. You're not looking at the same level of sell-off that altcoins have. It's very close. It's within, 10 or 15% of its highs. And that is absolutely phenomenal. Whereas other altcoins are going down like crazy. What I think is really interesting about coin and why I love it so much in my portfolio, I don't think Wall Street understands how significant of an interest Coinbase has in the altcoin or the crypto infrastructure space. When altcoins do catch their bid, and all of a sudden, once again, Altcoins are the hottest thing since sliced bread. I've seen it happen 2 full cycles, and I am absolutely convinced it's going to happen again, but in a major way with the Solana ETF and with the Ethereum ETF, Solana ETF, other technology shining, DeFi ETFs. And when that stuff starts happening and the altcoin flowers start really blooming, Coinbase's valuation will go from just an exchange business, just a Bitcoin custodian, to being kind of like the behemoth of crypto, the Amazon of crypto, with so many services, rails, commerce products, and investments in the space. I think that people dramatically underestimate the tentacles that Coinbase has. And I think that towards the end of this cycle, maybe towards a blow off top, if we get one in altcoins this cycle, you'll start to see Coinbase get some crazy valuations. And that would probably be your sign to start selling, because that would mean that altcoins are getting their premium valuations and Coinbase is in turn getting a premium valuation. Right now, Coinbase is a great pick because it doesn't have the downside risk of altcoins, but I do think it has the upside potential of altcoins, right? I wouldn't be surprised if in a blow off top, you got Coinbase above 1,000, potentially above 1,500 if things get crazy. So that's the upside potential. Though a more sensible long-term target would be somewhere between 5 and 800. I think that in a real crazy market, I think this goes up potentially as high as 1,500. That's just a moon boy target though. There's no guarantee that that'll happen. But that's where I think Coinbase is a really interesting one. Next, obviously Solana is going to do well here. I think that as long as Bitcoin holds in, Solana is going to range. I think its range is sort of set up between, the 180 range and the 230 range. We can see here it peaked at about 280. I think it's going to be a little hard for it to get back there. And I think that the Trump coin kind of marked a local top for Solana. I don't think it's a high priority here, but I would say if Solana dumps down maybe into the mid 100s, that would be a great opportunity because long-term Solana is the best blockchain in crypto. But this might be a little cooked for now. I would just say Solana, if you're looking to get more Solana, this might be a good month for that. And I'm saying if you're planning a little bit later in the year, if we see that in the middle of February, we might see Solana retrace as low as the mid 100s, maybe even a little lower, that would be a huge opportunity that I'd be looking to get my hands on. So that's why I'm putting Solana on the list, because I don't think it's going to perform super well, but I do think there's an opportunity to buy it cheaply. And it's really the coin to hold this cycle. I've been saying it since the bottom. Give me a little bit of clout here for covering Solana in the teens and saying this is the soul cycle all the way back then. I think the path to $500 to $800 is going to happen as long as this bull run continues. And so if you can get this thing in the lower to mid 100s, I think that's a steal. I don't know if it's going to happen though. Next, Hyperliquid. What is there to say? But this has been a rock star. It came down almost not at all during this collapse, almost not at all. In fact, people were fleeing to this for safety. Now, the thing about Hyperliquid is I think it does well during this choppy period. And the reason is because it's an exchange play. You're actually getting the fees generated by all this trading that is buying back the hype token. And that is super exciting. People go to these plays because they want to pick and shovel type play during the tough times. If you look at Rollbit, which was this crypto casino that got super popular in 2023, everyone wanted the pick and shovel play because all that people were doing really in the bear market was gambling at the casino. So it felt like a safety play. I think it's the same thing with Hyperliquid. And I do think that once risk really returns and altcoins start going 5, 10, 20x again, there is a little bit of shine that gets pulled away from Hyperliquid. Though I do think it's a solid hold for the rest of the market. I think it's an extra solid hold during these choppy periods like we're in now, whether it's February, March, until really QE begins. Now, this doesn't mean that Hyperliquid can't go on a mega tear. I'm not saying that that's off the table. It can potentially be the Solana of this cycle. Certainly might be the case. I wouldn't be surprised to see it, though, be kind of a rock star during these chop periods and maybe a little less exciting for the degen money once real new fresh liquidity enters the space. Nonetheless, it's a great pick for February. I said that on my last video, and it's been a great pick. If you remember my last video, I said I was selling SUI and other L1s into Hyperliquid, looking for a trade from 20 up towards that $40 range. So far, so good. So now let's talk about the hot topic. I know if you're like me, you're probably pretty much fully deployed into your favorite coins. In this moment, one of the things I want you to do is ask yourself some critical questions. Are you down too much to sell? Is that how it feels? That's certainly how it feels if you think of your all-time high numbers. Are you still a believer in these projects? Do you think that these projects are going to survive this period and come out on top? And of course, if you have liquidity left, I would be looking to deploy that wisely. But if we're being honest, one of the biggest questions you need to ask yourself is, do you want to sell any of these things? And the first step to understanding that is to take your all-time high number, take the number of your portfolio at all-time high that it was just at in December and wipe that clean. Look at your portfolio for what it is, how much value is in it now, and be realistic. Say, okay, do I think that these projects are going to come back? Do I really believe in it? And one of the things that I've prided myself on, of course, with stuff like the Superverse is I'm going to be relentless like a pit bull. But not all projects, not all teams are as relentless as I am. Not all teams are going to survive and come back. Some things are like Bitcoin. They're never going to die. You can't kill it. Some things are like Hyperliquid or Sol, where you have a pretty good idea that, okay, this team's cooking and they're going to bring it back. Some things like Super, you have someone like me who's just way too stubborn, has been doing this way too long to let things end where they were in December. So whenever the market comes back around, there are some teams that are ready to absolutely crush, but certainly not everyone. I'm sure there are some coins in your portfolio, in my opinion, specifically some memes, but potentially other ones that are just not as high quality, that the teams don't really have it. They don't have that differentiator. And those coins, I think you should be looking at the hard decision. Do you want to sell them? And I'm not going to point out specific ones. I don't want to kick projects while we're down in this bear market trend, but you should be looking to free up some cash if you can in this dip and at least put it into things that you think are for sure going to come back. Or it's okay. There's no shame if we get a little bit of a bounce here to sell some of those things into cash. Again, Bitcoin's sitting at 97K. It really doesn't look bad. But if Bitcoin drops lower into the low 90s or potentially makes a stab into the 80s, it's going to get real bloody. And that's when you really want that cash on hand to buy the stuff that you really, really like at even cheaper prices. Now, if it doesn't happen, that's fine, but it might happen. And I'm certainly looking at my portfolio, trying to figure out where can I free something up? What projects do I really not believe in? Of course, this is why I'm so heavy on technology projects like AI, like gaming, like L1s. Those projects are going to come back because the money that's driving this whole industry forward, that Bitcoin money, it's not coming straight into meme. It's not going to go Bitcoin memes, okay? It's going to go Bitcoin, then big technology stack like Solana. Then where's the DeFi? Where are the DEXs? Where are the hardcore infrastructure in gaming, AI? It's going to go look for the serious stuff. And if you know that that's the real big ball of money, then those developer, real hardcore builder projects, to me, that's a safer bet long-term. That's just what I feel is the case. So the short-term hype of these bear market attention-driven fundamentals, they come and go. And we've seen when they go fast. So think about what you want to hold. I'm not going to tell you what to do, but having a little bit of cash on hand in case we get a big lurch down, that is a smart play. Okay. And I know we're already down a lot, but thinking about where we just were in December, that's not the thing to think about. The thing to think about is what happens next. And what happens next is what defines how much money you make. So let's talk about a sector of coins that is absolutely crushing it. And this is the real world asset sector. Of course, the biggest one is Chainlink. However, I do think that MontraDAO Ohm paints the best picture because you can see that this protocol pivoted into real world assets. And look at this. This is not a chart that resembles absolutely anything else in crypto land. This is an absolute bananas chart here. You can see it's almost at all-time high. It's within a few percent of all-time high. Nothing else looks like this. And the wonderful thing about RWAs is that there's only a few protocols that are really doing RWA at the highest level. And I'm talking about when you hear Larry Fink out there saying, hey, we're going to tokenize stocks, we're going to tokenize bonds, we're going to tokenize hedge funds. Well, this is TradFi and how they're going to come into crypto. They're going to tokenize the stuff they already own and they're going to bring it to crypto. And so the question is, who are they working with? Because there's only a few platforms that have the compliance, that have the licenses, that have all of the piping that you need to actually do that with these regulated institutions. I'm going to do a whole RWA video. But for right now, everyone's looking at Larry Fink and going, yeah, we saw what you did with the ETFs. We know not to fade you. BlackRock wants tokenization. BlackRock and Larry Fink are going to get tokenization, and they're going to get it in the form of RWA protocols. So the writing's on the wall. You need to get into RWA. And the question is, which ones, how to do it. Obviously, I've said Chainlink is sort of the big blue chip one of the bunch, but there are several other ones, and we'll be talking about those. And I think those are where you want to be, at least for February. Those are still in an uptrend, and they will probably have some more juice in the tank. But make no mistake, we are still in a rotational market. And once it seems like RWAs cannot go down, that's the only thing left, whatever, it would be wise to take a little bit of profits, because the reality is that this money is just rotating around in a circle right now. And until we see the actual liquidity conditions totally change, it's important to be a little bit more cautious, to be focused on stuff that is not going to go down aggressively, or to be buying into stuff that is already down that you know is going to come back, that you're very confident and you don't mind holding through the volatility, because those are the plays that are going to be worth holding. Because once the tides shift, you're going to want to be in stuff that you love, or you're going to want to have made the best of your time in the meantime. And I know this is a random small coin, but I am an advisor here at TauBot. And I just think, look, they're constantly pushing out updates. This is such an interesting play within an AI ecosystem like Tau, where there's not really a beta project or Tau beta. And I just think that this is really interesting, and keeping an eye on projects like Taobot, which are completely down, which have their valuations abused. I'm not saying Taobot's going to go up nonstop in February, but when the tides turn, things like Taobot and things like the other projects that we've done a lot of research and I think really good work to find, well, I think that there's a lot of value there, and I'm going to keep working to find the gems for you. If you guys enjoyed this, you know what to do, smash that like button, and we'll see you very soon with the RWA Roundup.